Hello everyone. Okay, this is ProJack's weekly webinar, and this is TNT Sunrise from TradingView. Currently the one of the top author. Okay, you can click the all time. You can see my face here. Right, and I have acquired more than 200,000 reputations in TradingView through the past 5 years. Okay, and this weekly webinar will be your mentorship or be your guidance for you to get a better understanding of the market and where are we now and what's going to happen the next. Okay, so a quick review of the last week. Okay, let's start from the dollar index DXY. Okay, from the DXY. Okay. In the last week, we said the DXY is likely to have this ABCD patterns complete here. You see, right? It's likely to form these patterns, right? And it did form the ABCD patterns, right? And this ABCD patterns tells you that the DXY is likely to find a great opportunity to buy. Right? And I have explained very, very clear that if this is a foundation, if this is a keynote, the DXY we want to focus on buy, what's our plan? Guys, do you remember? If the DXY is going to rally, right? What is our plan? What is our plan? And for people who are joined by our mobile phones, okay, please remember to turn off your camera, right? Unless you want other people to see your face. Okay, thanks for cooperation. Yeah, you can. This is my first question, guys. If the DXY is going to rally, what is our plan? Can anyone answer me? We found these ABCD patterns, right? Point A, point B, okay. This is AB move, and followed by another leg of retracement, CD move. And after this two leg and equal length ABCD move, we anticipate that the DXY is going to find a great support at the previous neckline, the structure here, and going to rally. Okay, yeah. You can hear me, right? Guys, can you hear me? And can you type into the chat window? So far, I only... Okay, yeah. Then answer my question. If the dollar index is going to rally, what is our plan? Yeah, answer my questions. What shall we do? What are those? Yes, short euro, right? Yes, very great. Okay, we can short the major pairs. And what else? We can short the commodities, right? Commodity, right? I'm sorry, I think my spelling is wrong. Short the oil, gold, right? Maybe SPX 500, maybe. Yeah. Okay, and let's do a quick review, right? So last week, we're focusing on short euro. And how many of you get this very, very nice shorting position here? 1.2460. How many of you? Okay. You can use the Fibonacci retracement, right? It's close to, yeah, it is exactly at the 0.76. Okay. You can also use this engulfing candle. This is engulfing candle, right? One engulfing candle breaks the whole 1, 2, 3 bullish candles in 4-hour chart. And after engulfing candle, you can short. And you can see you get how many pips? Almost 200 pips, right? What about oil? Right? How many of you read my post in TradingView that we can short from 65.06? Raise your hands. Yeah, this is the trading idea that I published in TradingView, right? Last week. And I said we can short the pullback, right? I even placed the trade active notice, pullback nicely, and we enter from 65, just like this Monday, right? So if you short from here until now, you are in very, very good profit, right? Okay, good. So we do capture a very nice move, very, very fruitful profits. Okay, so the gold we capture from 1350. Okay, can check my trading view here. All right, and I said trade active. Okay, when we observe this inside bar. Okay, inside bar and touch 1356, which I mentioned in the last webinar. 1356 is very, very strong supply zone. Okay, and we want to short when the price reach there and form any bearish patterns. And this is a bearish patterns in inside bar breakdown. Okay, so let's do a review. Okay, I have mentioned many times that the inside bar, it is a very, very strong profitable patterns here. So I do hope that everyone here understand what is inside bar. Is there anybody that don't know what is inside bar is and or don't know how to trade, how to deal with this inside bar? Raise your hands. Reply by 1 if you don't know inside bar. If you know, reply by 2. Let's check. Okay, George, Sheldon, all right? A lot of people understand. Okay, 2. Is there any new friends here, first time know what is inside bar? Okay, first of all, I'm going to give you this tutorial links, okay? Because this is proved to be a very, very good strategy to use as inside bar, okay? So you can go to my YouTube channel, ProJack, okay? You click here, ProJack, and you go find the videos here of inside bar, which is which one? Let me think. Let me see. Which is inside bar here. I need to log out maybe. Okay. I will find the link. Every time I have to repeat this. I think it's last year. Okay, here. This is inside bar. Right? Was in October, I think. Yeah. 2017 is a webinar at 2017 October 09. Okay. And I host a workshop of inside bar and the pro gaps. Okay, this is one. Okay, so basically inside bar is, okay, you need to be very clear. We have 2 bars. Okay, the first bar is always the big one. The big one is the mother bar. Okay, the mother bar or the dominating bar. Okay, the second one inside means both of the inside bars high and the low. We're only focusing on high and the low. We don't care about the closing and opening, okay? I need to be very clear. You have to compare the high of the inside bar and the high of the mother bar, okay? You compare the low of the inside bar and the low of the mother bar here, okay? You check whether it is complete, okay, inside. If it is inside, then this is inside bar. Okay, so an inside bar trading opportunity occurs at the 3rd candle or the 4th candle. Okay, when occurred the next one you see here, when it breaks out, the instance it breaks down or breaks up, you take the trade. Understand? Okay, I repeat. Okay, step 1. Okay, find the mother bar. Step 2, find the inside bar. Okay. Step 3, okay, the next candle that breaks the high or the low of the inside bar, you take the trade at that moment. Understand? Okay, trader to everyone, GBP USD, please. Yes, I will cover that. Okay, be patient. You're not coming here to ask for trades, guys. This is a webinar. This is not a signal service. Okay, I repeat. This is not a signal service. Not only than that, right? So don't just ask so impolitely that GBP USD, please. Why should I give you this, right? We are holding the webinar and we want to let everyone to know better of the market and know to master some of the strategies. Okay. So guys, do you see the 3 steps? Clear? So tell me, what is the trigger point? What is the trigger point when you trade this inside bar? Is in the middle of this bar forming, or when it breaks down the low, or after this candle closing? The correct answer is when the moment it breaks down 13454.23. Okay, the moment the price goes below than 1354.23. Okay, you can be below 1354 or below 1353.90. That's okay. Okay, just go straight for the trade. And your stop loss. Okay, so entry will be almost the same as the high or low, because you are trading the breaking moment. If there's no slippage, if you are fast enough, you can take the trade. Okay, the stop loss, stop is the other side of the inside bar plus spreads. Okay. Yes, you are right, Sean. Will I long this pair as a pair break upwards? Yes. If the inside bar breaking up, it makes sense because it's going to make a higher high, and you can take the trade because your risk is so small, and you are catching the momentum. Okay. So the beauty of the inside bar is, since you are trading the inside bar, so your stop loss distance is fixed. It's the inside bar's distance. It's relatively small compared with some other bar. Okay, so your stop loss room is small, and it is easily to go for 1-to-1 or 1-to-2 risk reward ratio, and you are catching the momentum. If the third bar goes up by penetrating 1356.25, you can take the buy and put your stop loss at 1354.20. Understand? Okay, you can do both ways. Breaking up, you buy. Breaking down, you short. Okay, however, you have to pay attention of the inside bar's location. Okay, whether the inside bar are facing any strong resistance or any strong support. You don't need to wait to close. Don't need to wait for close. Just trade. Just take the trade on the same time frame, because if you switch to a lower time frame, this may not be an inside bar. Okay, so you have to trade the inside bar when you can see it. Okay, trade this low and this high. There's no force breakout. If there is force breakout, we just hit your stop loss. That's it. Okay, just take the stop, take the risk, because that is the risk you want to take. Okay, it's just a losing trade. That's all. Okay, you need to worry about the face breakouts, because force breakout, even if it occurred, we are not afraid. We are just risking about 20 pips or 30 pips. All right. Okay, so mother bar, inside bar, breaking down, you take from 1354, easily you get about 100 pips. And if you take some profit, you take half profit of here at the previous support here, you take half of the profit and let the other half run. You can see here, you can easily get a 300 pips move. All right. And now, what is good? Okay, I want to mention that sorry, someone is using my Zoom. Hello, still can see my screen, guys? Okay. Okay, good. Okay. Okay, good. So for the gold today, what I'm looking is the gold do have a pullback. Okay, we expect the gold will pull back from the 618 level here, 1326. Okay, together with the neckline here, we do expect the gold will have a rally, and we are so confident to short any pullback here. That's a key point. That's why I post in TradingView. Okay, if you see my yesterday's charts, okay, have you seen this one, guys? When the gold pulls back to 1338.90, have you seen that? Okay, what you should do is we want to take the short and put your stop loss above the origin of the down move. Okay, we want to take the short here and put the stop loss above the 1348. That's the correct way of trading the structure pullback. Okay, so imagine your stop loss is here, 1348. You short between 1338 to 1342. Okay, that's okay. You can use multiple orders, and now you enjoy about 100 pips already. Yeah, still dropping. And I can tell you guys, it is very likely for the gold to complete this ABCD move again. All right, just now we said in the DXY, the dollar index, have the ABCD, and now I think the gold will follow. It will easily go to 1309. All right, and the first target is about 1330. So if you have some profit, you can take half. Okay, you can take half, and you can let the rest run. And look, the daily chart. The daily chart is telling me that the gold is actually getting a lower highs again here, lower highs. You can see here. So gold is in this kind of a channel, right? We can put that in this way. So it is likely for the gold to go to the other side of the channel. Okay, go to 1304.05 or 1310. All right. If the gold breaks the horizontal structure of 1,300, it will form a topping formation, and the price will make fall even lower to 1270. Okay, so remember these two places. Okay, it will go to 1327 first. This is the first target. Second target is about 1310. If the 1300 is broken, you can expect the gold to fall to 1270 or 1266. All right, but we have already captured very nice shorting position, and all I want you to do is take some profit. Okay, make sure you earn some money from the fall and hold the rest of the short. Hold and as much as you can to enjoy the trend. Okay, Sam said there's a potential garlic pattern. Yes, you're right. Okay, there is potential garlic pattern if you by looking in this way. I won't say this is a potential garlic. It will be potential a bat pattern. Okay, if the X point is here, all right. If we take even longer swings, right, I will say that there is a potential cipher pattern here. Okay, this is a potential cipher pattern that it may fall to 1170. Okay, 4 hour chart, yes, you're right. If you're using this one, it may have a potential garlic. Yes, you're right. But I won't suggest you to trade these patterns because the X point is not very good. The X point is not at an extreme powerful uptrend origin. All right. You can choose the X point here, but I won't suggest you choose the X point here. Okay, compare this point and this point. Which one is the significant uptrend moves origin? Definitely, I will choose this one, not this one. All right. So if you want to take a short-term, buy from 1310, it's okay to capture some bounce, right? But I won't suggest you do that because the upside room is not so big. All you need to do is to focus on selling, okay? Focus on selling. That would be better, okay? Because DXY is going up, okay? And let's check what is the room for the DXY to go up, right? We check daily chart. I can tell you that DXY will easily go to this place, 91.80. And if this place is occupied by the bulls, it will go easily to 95.50 to this place. Okay, so if the DXY is going to rally so much, how much do you think the gold will fall? Okay, cool. All right, just think this question, okay? So gold, very clear, short any pullback until 1310 or 1270, all right? Of course, you can take some profit when you have, when they hit this 1328 or 1329, this minor support, okay? Take some profit, short the pullback. In today, okay, tonight, if you haven't taken any trade from gold, a very great entry point will be 1,336. Okay, I hope that you all remember this, right? Okay, cool. Okay, if you haven't traded, you can take a pending short sell limit here at 1,336 because this is a breaking point. If the price ever pull back to here, you have to take the chance to short. That is the best entry point. If you don't have any trade, if you miss the 1,342 short or you miss the 1,350 short, this is your last chance. Okay, all right? Okay, good. Let's go for Euro. Euro, okay, take the short here if you don't have any Euro short. I was waiting for Euro to pull back to 1.2375. Okay, but it didn't give me the chance. So just in today, just 1 hour ago, I said we can short now. We can short here. Sorry. We can short at 1.2320. Put your stop loss about 1.2360. Okay, and aim lower. Aim for breaking down. Okay, and it did happen. It just did happen. We just captured the move. So immediately you enter and just it just fall very, very nicely. And currently it's in a pullback. So get ready when Euro pull back to 1.2284. Okay, get ready. Okay, same thing, same with the gold. Pull back short because in a bearish trend, guys, remember this. If you see a bearish trend, okay, the best way for you to capture the trend, to follow the trend, is to pick the high. Okay, the high will normally be the previous low. Just remember my words. Okay, the high will be normally the previous low here. Because that low is penetrated, so the price pull back to here. Those people who bought from here and here will have to escape. And when the buyers escape, there will be a very strong selling force here. Understand? So in a downtrend move, capture the high, not the low. Wow, the gold is still moving down, right? Okay, it's so fruitful. Okay, I can show you my trades. Right, I have already you see, I have already take some profit of my gold already, and now I still have 3 loss. Okay, this is one I short when breaking the low. This is the two entry point when in smaller time frame I say I saw breaking down again. All right. Okay, anyone holding the gold short is really, really powerful. Okay, all right, great. Okay, let's get back to the charts. Okay, for the Eurodollar, I would expect you can short from 1.2 to 80, okay, and I think this time the euro is going to break the trend because the daily charts, look at the daily charts, okay, you can see that it has breaking the trend line here, already broken, okay, so this trend line broken, it was going back to 1.21 or even 1.2100, okay, so get ready to hold that, okay. Okay, some people asking for sterling, right? Sterling is not so bearish than euro, but sterling is not facing a very good support because the one week capture from the sterling, if you remember my trading last week, okay, this 1.4200 or 4170 short. Anyone taking? Anyone taking? No, you missed it. Okay, then you have to wait for other opportunities, right? So beautiful, right? Instantly about 200 pips you captured. And right now, what we should do is, guys, have you observed that 1.4096 is becoming a resistance? The previous supporting area here, you can see here, this is one candle stands above, stands above, stands above, stands above 1.40, right? 1.4100, and it just, breaking down, and it pulled back again. The buyers couldn't, push the price higher. So what you should do when you see this kind of thing? What you should do? What can you do? Answer me. Yes, you can sell and just simply put your stop loss above this selling, maybe 1.4116, right? And aim for grade 4. Yeah. But if you want to pick euro or sterling to sell, I will suggest you short euro, because if you look at the euro sterling, you understand what I mean, because euro sterling is falling down, right? It's falling down. As I said in my last view here, okay, we want to sell the, sorry, not this one, it's a daily charts here. This channel. It's this channel. Okay. This channel still work, right? And when the euro sterling pull back to here, complete the ABCD retracement. This is AB move, and this is CD move. When you complete the ABCD together with the uptrend channel, okay, you should sell from 0.89 and hold to 0.86. And since euro sterling is falling down, so sterling is stronger than euro. So if you want to short the European currency, I think euro will be the best. Okay. Okay, let's move on. Aussie dollar. Okay, Aussie dollar is in a our ugly downtrend. Ugly downtrend didn't really move very fast because it's hitting in some kind of supporting area. Okay, so I won't suggest you to short Aussie at this moment. The price is not so attractive to sell here. I will neither suggest you to buy. So Aussie, I think for this week, no trade. Okay, listen to me. No trade for Aussie this week. Reply me by 6 if you understand. I told you, Aussie dollar this week, no trade. All right. Okay, good. Kiwi dollar. Kiwi dollar is interesting. We can take the trade because Kiwi dollar compared to Aussie. Let's compare. Let's compare the difference with Kiwi and Aussie. Okay. You will see a very, very interesting thing. Okay. Same thing, Aussie rally this and Aussie pull back here. Kiwi rally from here and Kiwi only pull back this much. Which one do you think have the room to short? If you know that they are the same currency, they are also commodity currency, and they are all in, the countries are so, it's like neighbor countries, right? Yeah, of course, the Kiwi dollar. Okay, so all these four actually indicates the Kiwi may also fall to 0.70 or 0.969. Okay, that's why I post a chart of Kiwi dollar. I said we can short the pullback from 0.70 to 58 to 0.7171. Okay, let's check. Okay, you can see the first target almost hit, right? Take some profit, and now it is a very, very good place for you to short it again. Okay. So Kiwi dollar, we can take the short. You can take now. Okay. It is a 0.618 pullback. Okay, and plus the ABCD patterns. Okay, and also the structure, and also the downtrend channel. Sterling yen, sure. Okay, sterling yen are we took a short last time from here. Guys, remember? Actually, we short sterling yen for 3 times, I think. The first time we short is I think let's check. Let's do a check. Oh yeah, the first time short is based on a 4-hour inside bar. Okay, this is a very, very good example of how important you follow the plan. Okay, according to the definition of inside bar, see guys, this inside bar, okay, you see this wick, these shadows, it actually breaks down first and then goes up. Okay, so when it breaks down, I took the trade and I published in trading that we sell from 149.03 and our stop loss is above the here 149.30. Okay, the next one we are taking out. Right, we have a stop, and if you don't stop here, guys, that's terrible because you will have another 100 pips or another 60 pips losses if you don't take the stop. Okay, we take the stop, right? And I said we should wait for 0.618 to short. Okay, this is our second. Is my second short. Okay, honestly, I do sell from 149.90. I took the trade. Yes, I sold it and I make some money. Right? It is very good for us to capture this move. 149.90. We have a sweet 80 pips. Okay, so the first trade we lost 30 pips. Second trade we win 80 pips. Okay, if you check my sterling yen's the trading journal, okay, you understand what is my thoughts. Okay, we closed the looting trade of 30 pips, and then I said we can wait for 149.30 to short the 618. Okay, and it really does. Okay, it really does. Okay, from here to here. Okay, we take 80 pips, and then I said I want to short the 1.272 extension, and this one is a fail again. It actually breaks new high. Okay, lose another 60 pips, and not an issue, not an issue. The next time, you can see here. Okay, I was stopped here. My third trade was stopped at here, 149.90. Okay, I short from here. My stop is here, and I was stopped here at this candle, and then a very, very strong pin bar here occurred, and then the price continued to move higher, and then I short here. I short this place. Okay, you can go to my trading view to see. Okay. My entry place is again 1 hour inside the bar short, or 4 hour inside the bar breakdown. I short from 150. Okay, so from 150 we take a short again. Right, 4 hour chart. Let's see. Okay. Yeah, this is a beautiful inside the bar breakdown again. Okay, short the inside bar breakdown, and we win about 100 pips. So 148.38, more than 130 pips. and then you take some profit, and now still have some other positions here. So if you still have a short from here, it's okay for you to hold. Okay, not a worry, not an issue, because it didn't break a higher high. Okay, however, the pullback has been quite strong, so you should be careful that it may touch your break-even stop loss, but that's not an issue because you have already win 130 pips. Okay, so it's very important for us to remember the rule. Okay, rule. Okay, first target hit. First target hit. Okay, close hard or third or 1/3. Okay, then move stop loss to break even, so that you have a risk-free trade. Okay. Now, why the sterling yen is going up? Because sterling dollar isn't falling. Sterling dollar is like ranging, right? And but dollar yen is flying. Dollar yen is flying. Okay. And I have said that the dollar yen, this place has become a V-shape reversal. This is a V-shape reversal. Okay. So it pulled back to 105.72. Wow, that's a great place for you to take the buy here. And let me ask you, did you see a inside bar breaking up, guys? Can you observe it? Can you observe it? Is this one an inside bar? Tell me. Okay, good. So did you get it? Get an important lesson? An inside bar occurred at a very, very nice structure. It's the best trade for you to take. Just to measure the you can guys just measure the risk and reward ratios. It's so beautiful, you know. Look at risk reward ratio. Wow. 1, 2, 3. 1, 2, 3. Okay. All right, Seraph, you're asking what's the difference between V-shape and Libra, right? Okay. I will tell you this. V-shape, the V-shape, you have to be a V, and it's important for the price to break the neckline. Okay, and the price goes up, pulls back, you buy from here. Okay, a Libra pattern is when the price have a kind of a first bottom, and then it still goes down, and it pulls back. I don't need the price to break up or make the equal. I just need the price to be back, than the first support. I'm waiting for the price to pull back to the same area again and buy. This is a Libra, okay? Because it looks like, you know, this. Okay. The key point is the V shape has to break in here, but Libra pattern, no need. Okay, good questions. All right, okay, our time is flying, so let's move on. Okay, dollar Canadian. Okay, how? Now I think Canadian dollar is okay to take a short because, guys, this will be a, you know, a trend continuation trade. Okay, down forward, sideways, another down, penetrate all those, you know, these smaller candles. Okay, so in smaller time frame, you should focus on selling the pullback. Aim to maybe 1.27. Okay, it is possible for the dollar Canadian to pull back to 0.618, which is 1.2582. It is possible for the Canadian dollar to fall this or to here. All right, so go for the 1 hour chart. Let's find where is the best opportunities. Wow, it's here. Okay, so the best place, yeah, 1.2870. If the price pull back to here, you should take the short when the price pulls back to 1.2860. Okay. Actually, there's a very great shorting opportunities here. Wow, that's too perfect. See, this is a this is a classical. This is a classical entry. Okay, the price sideways. Okay, sideways. Okay, equal lows and equal highs, and then boom, it breaking down, and then you see the price just will pull back. Right, and after the pullback, a huge move occurred. Oh. Right, until now, wow, beautiful move. 1.30 to 1.28, 200 pips. Okay, so structure breaking out and pullback is the best trading strategy for new traders and for experienced traders. Did you learn that? Okay. Can you understand? What is structure? This is the yellow zone is structure. The breaking out is here. The pullback is here. So your entry point is here. You wait for the price to pull back to here and short. Give me some response if you master this strategy. Reply me by 6. If you, yeah. Okay, great. Okay, SPX 500. I will say we should buy SPS 500 now. All right, or these 2 days, because the low is tested. All right, it formed nearly a guarded pattern, but sorry, a bad pattern nearly. The C point is not so we call theoretical, but it's still a harmonic pattern wave. So if 2560 is hold, right, the price will rally. So you should buy the S&P this week, and hopefully the price will go to 2,700. This is a target. Okay, so S&P buy, right? Harmonic pattern form, nice pin bar. Okay, nice pin bar and nice price actions. Okay, S&P is going up at least to 2,628, maybe to 2,690. Okay, S&P covered. Dow Jones. Okay, Dow Jones. Same thing. It's the same patterns. You can buy the Dow Jones as well. Okay, Dow Jones is a much more clearer. This is a beautiful bat pattern. You should take the trade. Okay, buy the Dow Jones. Right. The target number 1 will be 24310 and 24896. Right. 2 targets for the Dow Jones. 2 targets. Okay, cool. Are we good? Okay, last. Bitcoin, all right? Time to buy here. Okay, the 6,659 is a great level of this bat pattern. And you can see that even in cryptocurrency, the harmonic patterns really works. Okay, I can tell you that there's many good harmonic patterns here if you understand. Okay, if you understand. Right, and you can see here there is also a harmonic pattern here, this one, but this one is not so beautiful because it's only pulling back by 618, not a guarded pattern, right? But ABCD move definitely is very powerful. Okay, so I will say that Bitcoin is okay to buy. Divergence signal. Okay, divergence, very simple. Okay, I will just use an example. Okay, normally I will use the RSI, or you can use the MACD, but it's the same thing. Divergence just means contradiction. Okay, contradiction. I will just show you what is contradiction. Okay, let's use the oil as example. Okay, here, guys. Looking at it here, did you see that the oil has making a higher high of the price? Can you see that? Reply me by one. If you can see here, the oil from this candle to this candle, the price moves up and it breaks new high, right? And do you see the RSI, the indicator, the value is dropping, not in making a lower high, higher high, but making a lower high. Okay, so yeah, then this is divergence. Okay, so divergence just means, okay, by definition is price making higher high, but indicator, okay, making lower high. Right, contradiction. It's like, that's why we call divergence. Have you mastered it? And you do see a nice price action formed here. Do you see a bearish engulfing candle? Right, it just tell you that, okay, it's good to take a short. Okay, you can use the divergence in 4-hour chart or daily chart, whatever. Okay, you can use that. You can check here. A lot of the time, when divergence shows, it just give you an alarm that be careful, don't buy, don't chase the high, don't buy when it make a divergence, although the price is going higher, but the RSI is making higher low, lower high, sorry. It just indicates another fall may come, okay? Okay, so I think that's all for today. Thanks to you guys for coming, and remember to go to my website to see check my course information, because my course will help you to solve the problems of the you don't have a trading plan, you don't have a plan, you don't know how to enter the market, how to make your stop loss, and you don't have any idea that where the market is likely to move. Okay, if you want to become a professional trader, okay, join my course. Okay, I will tell you whatever I know, whatever my strategy is, and I will just teach you as my students, and you join my students club, okay, to have some discussions and enjoy the webinar. And you are free to send me any messages when you are learning. Okay, so this is my course information. Okay, and my YouTube channel is ProJack, just remember. Okay, and my trading view, you still need to follow me. Follow my trading view. I will publish any idea that I think it is good to take, and you have to understand why the logic is like this. Okay, why TNT Sunrise said gold can short. Is there any inside bar? Is there any pin bar? Is there any structure? Is there any Fibonacci level, or is there any harmonic patterns? Okay. What are the values of the EMA? Simple, 8 and 89. You can just add in trading view. 8 and 89. I'm using these moving averages. Okay, so far okay. Yeah, but moving averages is very simple to use. Okay. Okay, you can use the golden cross, dead cross. Right. Typically I like the dead cross and pullback of 89 in your short. Most of the time you give a very, very good profit. Okay, 8 and 89. All right, that's all for today. Okay, I will publish the recordings to YouTube later, and feel free to contact me if you want to learn how to trade, but not taking, silly, decisions by yourself or listen to others to trade. Okay, you have to learn how to trade because that is your money. Okay, you have to be responsible for your money by yourself. Okay, don't let other people to handle your money or your account. Okay, because if they fail or if they losing money, it's your money. It is not them's, right? So you have to master it by yourself. Oh, by the way, oil, can you take short, guys? Can we take the short of oil, guys? Answer me. This is a very, very good trade. I will say, should we take the trade? Right? I think we can just take the trade. It's a good opportunity. Right? The oil is pulling back to the structure after a very nice fall. All right. So first thing is we have to measure the risk. Okay, measure the risk. All right. Sorry, I should desktop 2, desktop 1, or desktop 2. Let me just show. Okay, here. Okay, so now is all right. Let me just use this this Checkmaster EAs. Okay, it's very simple to use. Okay, just key in the value that I want to lose. Say, for example, I want to lose not more than $300. Okay, okay, and this is my entry is here, about here, and this is my stop loss. Okay, let's go to our 30-minute charts. Okay, yeah, 1 hour charts. Okay, let's say I want to enter from here. My stop loss is about this candle's high. Okay. Entry, stop loss. Let's take the order. Oops. What happened? Let me do $200. Okay. That's entry. Oh yeah, yeah. Okay, it tells you I should enter 0.14 lots. Okay, and you just click my order. Done. Okay, you can see that. Okay, my order has been sent to the trading platform. Right, this was my limit order here, and this is my stop loss. Okay, the risk is about exact $200. Oh, sorry, I shouldn't use. Oh yeah, $67. How come? Some problems here. Let me close it. Oh yeah. The system actually helped me to send 3 orders. Okay. Oh, this is a version 2. Sorry, I should be using the version 1. Okay. Never mind. I mean, it's the same thing. I just want to show you guys how to calculate the risk. Okay. So this is our sell. I'm sell here. Okay, on sell here. Sell here. Okay. And what is my $200? Okay. Click order. Okay. Right. Done. Okay. So my order is pending, and when the price go there, oh, why my stop loss is only this close? Oh yeah, I'm using the $63.78 to 64.01. Cannot be 10 loss. All right. Anyway, I will figure it out. I think this some problems with my EAs. Anyway, just clear all the orders. So sometimes you still need to be manual. Oh yeah, it give me 3 orders again. Okay. 63.74. My stop loss is 4.08. What is the risk left? What is the risk distance? Okay, 34 pips. So 34 pips. If my risk is about $300, how many lots I should trade, guys? Tell me. 34 pips. Are you still with me? No, 34 pips. I'm asking that risk amount is $300. You know that one lot equals to 1,000 barrels. Can't see my, oh, sorry. I think I should share my desktop. Okay. Can you see me? Can you see now? So oil is 1,000 barrels per lot, right? Which means every $1 move is worth 1,000 US dollars. Okay, so if you trade one lot and you take 34 pips, your loss will be right $340, and I can only take $300 risk. Use 300 minus 300 or divide by 340. The correct answer is 0.88 lot. Clear? Are we clear? Explain again. Okay. All right. Let me just explain to you. All right. Say you want to short from 63.71, and your stop loss is above 64.0, maybe 11. Okay. All right. You're taking this time. You're taking 40 pips. 40 pips. Okay, or 40 cents. 40 cents stop. Okay. One lot equals to 1,000 contracts. Okay, so if the dollar, it's like just like shares. You have 1,000 shares, and every share goes by $1. How much you win and how much you lose? $1,000, right? So you know that the value of $1 move is 1,000 USD. Okay, so if it moves by 40 cents, so this 1,000 times 0.40 is $400. Okay, that is by one lot, you will risk $400 if you're taking a 40 cents stop. Okay, understand? And if my risk is only $300 US, so how many lots should I take? Okay, just use 300 divided by 400, which is same lots. Okay. Understand? Okay, so the risk distance here, okay, you use your risk amount, okay, the risk amount dollar, okay, the risk dollar amount, okay, divide by the risk distance. Okay, per value per one lot is your lot size. Okay, this is a formula. Okay, so that you will make sure that if the price really goes 40 pips and hit your stop loss, if you're trading by 0.7 lot, 0.75 lot, basically means that you are trading 750 barrels of oil by 40 cents move. Okay, you will lose 300. Easy. Okay, and this $300 should be not exceeding 2% of your account. So your account size will be 15,000. You can take the $300 move because that one losing trade won't affect your account too much. You're just losing 2%. Are we good? With easy math problem, math with money, we become dumb and silly. Haha. Yeah, it's not you are dumb and silly. It's just you are not familiar with this formula. Okay, just be familiar with the formula, right? And you can use some. You can go to find some. There's some like a lot size calculator indicator. You can look for it. Okay, some websites are providing it also. Yeah. Okay. Yeah. it's good to end the webinar here. Thanks guys for coming. All right. I'll see you next week. All right, see you next week. Okay, join my course here. Be my students if you want. Okay. Okay. If you want to learn. Right. Okay, ending here. I'm going to uploading the recordings to YouTube. Right. Happy trading and trade professionally. Thanks. Bye.